So without any further delay, let's kind of dive right into the session this evening and what we're going to talk about. Buying a home is a complicated process. In today's market, there are about 43 people from 13 different industries who put their hands in the pot of a real estate transaction. And every one of them has their own agenda. Each one of them needs to be paid for their services. And knowing to what to look for and look out for is really key in helping you kind of save both time and money on your real estate transaction. And so as we dive into the 5 mistakes this evening, we thought we'd start the conversation, talk a little bit about the real estate market. What you're seeing here on your screen is actually an overview of the process. And Brian, you want to kind of share a little bit about this overall process?
Yeah, Brett, I'd love to share about this. I invented this flow chart because I found early in my career that most of my clients were engineers and they loved flow charts. So I came up with this flow chart to really speak to the engineer about the entire process. And any good engineer knows that if you skip a step, usually you have a result that doesn't amount to what you want. So I've put this thing together in a several step format. And this is a brief overview, but certainly we believe that preparation is a key aspect of doing the home purchase correctly. And so here's a quick overview of the whole process.
Mistake number 3 is, and I'll let you continue on, Brian, is about not really understanding your loan options. And there are a lot of different options in financing. And as a buyer going in, it's not just all about rate or all about monthly payment. If it was all about monthly payment, then we probably wouldn't have the real estate crisis that we have. We got a lot of people who got into adjustable loans and negative amortization loans with minimum payments that they could never pay. So let's talk a little bit about that.
So yeah, before we get started, I think I'm going to use the emotion stuff too. What I've always said about the loan that you go and get is it is a tool to enable your purchase. It is not something to be emotional about. It is a math problem. And we're going to get into a couple of diagrams tonight that'll talk about the loan. But there's a variety of loan options out there that will enable you to use to buy a property. Potentially, one loan might allow you to buy more property than the other, and one loan might be more suited for you. So finding the right lender that offers the right loan is critical.
And when it comes to getting out there and shopping, you can do it yourself. Which is
shopping for a loan.
Shopping for a loan. Yeah, you can go out there and you can put an application in at Wells Fargo, put one in at Bank of America, and put one in at Chase, which is it's laborious. You're going to have to provide your tax returns and bank statements and all of this at all of these places. So that's one option.
Multiple applications.
Or you can have a broker help you. And typically, a broker is going to provide access for all the major banks: Wells Fargo, B of A, Chase. As well as a multitude of other lenders with other additional loan programs and options for you. So one other thing that can help when you're looking to get a loan for your home that many people aren't aware of is that you can actually have the seller help pay for your loan fees. And that's one thing, just by adding a simple clause in your purchase contract that can save you literally tens of thousands of dollars by asking the seller to give you a credit for your closing costs.
I think we get into one section later talking about negotiation, but certainly negotiation of the cost to close are critical. Is that the next slide, Brett, or did we skip one?
We skipped one. And go back to... Yes, there we go.
So this first slide is just a quick diagram that outlines kind of how banks and mortgage brokers work. In fact, the reality is these lines are getting blurrier every day, and most of the mortgage brokers are actually tending to be more like mortgage banks. But in any case, if you're going to operate through a mortgage broker, the mortgage broker will package your loan application and be able to go into and get a wholesale rate from any number of banks. Where if you were going to go to a retail bank, you're going to go in the front door and you're going to be offered the rates and programs that particular bank has. The mortgage broker is going to be able to take your application into several banks and give you a variety of different loans at in theory, a wholesale rate after they'll eventually mark that rate up to more of a retail price, but it will give you more options working potentially with a mortgage banker or broker.
So Brian, I mean, just as an example, with your experience, if a home buyer is out there in the marketplace and they're looking to get the best possible financing as far as the rate and term, or the rate and pricing for their loan, what do you think, if someone is fortunate and they work with a broker, what kind of a difference might they experience in rates?
It's really interesting. In the last several months, the mortgage banking world has been turned on its head, and quite frankly, for most buyers, the margin differences are getting slimmer and slimmer. The competition for by the way, as a home buyer, you are gold in the marketplace. Make lenders compete for your business. But I think that more and more, just in the last few months, because of all the law changes that have happened, the mortgage brokers and the mortgage bankers and the regular retail banks are all kind of converging on a rate that doesn't have as wide of a band as it did maybe a couple of years ago. So the ball is in your court. It's a fabulous time to get a loan, and everybody that's in the mortgage business is competing very, very closely now. Without getting into the nitty-gritty detail, the margin differences aren't dramatic now from lender to lender. You still need to shop. Mortgage broker / banker can still give you a multitude of options, whereas the retail bank may not be able to provide that. So that would be the key.
Okay. So what I'm hearing from you is basically your mortgage broker can be your advocate to take your loan application and make other banks compete for your business.
Yeah, that's a good way to put it. I mean, a mortgage broker is going to basically be your advocate in the marketplace, and in theory try to get you the best rate possible. You want to verify. The best thing to do is ask the mortgage broker, quite frankly, what's your markup over wholesale? They are obligated now by law to tell you what their markup over wholesale is, so you can get a good sense for how competitive they are. This next slide is one that talks about points and rate. Everybody knows interest rate, but then points are actually a cost of obtaining a loan. And in the diagram here, we have an interest rate of 6.5%. I guess this was an old slide, because that was when rates were at 6.5%, so a while back. In any case, this shows you what your payment would be on a $400,000 loan at 6.5%. It'd be $2,530, and with a 0-point loan at 6.5%, you'd have no upfront cost. So on the diagram on the right, you're starting on the lowest line there, because you're paying very little dollars up front, but your payment is quite a bit higher than the loan below, where you're starting at 6% and paying 2% up front. So in the second loan, you're actually, in the day one, you're at $8,000 in cost, whereas in the first loan, you're at almost nothing up front and a higher monthly payment. The takeaway on this thing is there's no free lunch. The banks really don't care which loan program you choose. They figure they're going to make profit either way, because you're going to keep the house anywhere from 3 to 5 years. But if you were going to do the math, and we've probably got some engineers online, it's simply math. How long do you think you're going to be there? And at some point these lines cross, and you can do the math and figure out when the lines cross. Most good mortgage people can actually do this diagram for you and show you that one loan would be better than the other depending on how long you keep the loan for. So hopefully that gives you some sense for the difference between rate, interest rate, and points. Points being, a point is 1% of the loan amount, and it's paid up front as a cost to obtain the financing.
Okay. So a few tips. I know, Brian, you have some experience actually in lending yourself in this industry.
Yeah.
And you wanted to share just a few tips to ensure a smooth loan process?
Real quick, this is an interesting one, because in the last couple of months, the federal government got involved and decided to mandate that your loan officer sign the closing cost estimate that they give you when you make a loan application. Up until 3 months ago, the loan officer didn't have to sign that document, didn't have to commit to those fees. They asked you to commit to understanding the fees, but they didn't commit to the actual dollar amounts. Now lenders are required by law to basically get very close to their original estimate, and they are signing on this document. So that's a beautiful change that's happened just in the last couple of months in the lending world. There's a couple other things I think that we have here. This is a phenomenal one. This will save you a tremendous amount of stress in the home buying process. When you're interviewing lenders or talking to a couple of different lenders about how they can help you, one thing that I would highly recommend is to tell them that your expectation is that they would deliver the loan documents well in advance of your closing date. What we find in our industry, and it's horrible, is that lenders tend to wait until the last minute to deliver the loan documents to escrow. I'd like to change that. I'd like to throw that on its head and say, let's encourage the lenders to get the loan documents to escrow early. Make them commit to that before you choose them as your lender. Ask them if they can get the loan docs to the escrow 10 days early. If they do that, the benefit is you'll get a chance to review the documents prior to your going in to sign the paperwork. Too many times we have people rushing out the door of their work to sign at the last minute. And I think if you ask the lender in advance, there's a few other things that are going to happen here, a few other moving parts that are going to happen. But if everybody knows you want the documents in escrow early, you'll have a better chance at closing without stress and pressure. And the last one is really key, is your realtor is going to work with several quality lenders. And it's a good idea to team up with your realtor to make sure that you've got the right lender that can perform and make it happen for you.